Today, I am going to talk very negatively about Palantir. So if you get easily offended and you own Palantir stock, I apologize ahead of time. This is a video where I want to go over potential risks with this company and discuss what those could lead to for the stock price. But keep in mind, as I am discussing negatively about Palantir, I do still hold it in my portfolio. We will take a look at that in this video, but basically what I am doing is I am preparing for the worst while also being able to capitalize on the potential upside. At the end of the day, I know videos like this get a lot of hate because there are plenty of people out there that hold Palantir stock and want to hear how it's going to double or triple over the next 6 months. In my opinion, that is not a realistic possibility. I am happy to hear your opinion down in the comment section, but we are going to be going over my bear case for Palantir in this video. So if you enjoy, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. So with that, let's go ahead and take a look at the YouTube portfolio. It's currently sitting at a value of $60,465.42, down around $6,000 from the all-time high of this account of $66,172. The majority of the drop comes from Super Microcomputer. At one point, we were up around 75% on this position. We are now only up around 19%. We also hold Alibaba, Google, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. We currently only hold 10 shares of Palantir. However, coming into 2025, we had 100 shares of the stock. I sold out of 90 shares when the stock ran up to around $90. It obviously ran further past that, all the way up to around $125 per share. However, it's pulled back to around the price where I sold at. And ultimately, the reason I sold out of those 90 shares had to do with valuation for Palantir. We'll take a look at that further in the video. However, my opinion was at the time that the valuation was overblown. However, we have seen companies like Tesla run up to extreme valuations and hold those price levels for long periods of time. And I thought that Palantir could be in a very similar situation. They could sit at higher price targets than where they were trading at. That is why I held on to the 10 shares just in case the company continued to run up in stock price. And on top of that, I do hold 2 dividend ETFs, SCHD and VYM. At some point, I'm hoping to sell out of SCHD, and then I also hold a cash position of around $11,000. But today we are going to be talking about Palantir. Palantir is now down over 27% in just the last month, and from its all-time highs of almost $125 per share, the stock has now fallen by over 30%. However, the company is probably due for a little bit of a pullback because over the last year, it is now up over 200%. And from IPO, Palantir has ran up over 800%. The pullback that we are seeing in Palantir's stock price has a lot to do with macroeconomic conditions. The environment right now is very risk off due to a couple of different things. The first being tariffs. There are a lot of concerns around what tariffs could do to the economy if they are going to slow down spending for consumers and also hurt companies' earnings and top line numbers. The other big thing that is affecting companies, especially like Palantir, is Doge. Doge is making cuts to the federal government that could have impacts on Palantir, especially when we think about military spending. And recently, Palantir actually delivered the first 2 of their AI-enabled systems to the US Army. This is from a contract that they signed a year ago back in March of 2024 for $178 million. The thing to keep in mind with these military contracts is they are not necessarily guaranteed, and oftentimes they are split between multiple vendors. So Palantir may not actually see all of this $178 million, especially if the US government ends up cutting some of their contracts. But keep in mind with this contract, this is only 2 of 10 total Titan systems. That means that the US government, if they wanted to cancel the remaining 8 systems, they probably could with very little fees for the cancellation. The benefit for Palantir is that as we have seen the trade war going on with tariffs, tensions across the world have increased between the US and a number of different countries as these things have rolled out. What that ultimately means is there is more need now than ever to maintain military spending on systems such as these. However, even if we see military spending remain the same or even potentially increase, there are other issues going on in the broader economy that will affect stocks like Palantir that are more risk risk on. One of those being that US employers have announced 172,000 layoffs in February. That is up 245% from January levels. And these layoffs create a huge downward pressure, especially for stocks again like Palantir that are more risk on, because now you have 170,000 people that do not have as much money to spend in the economy. However, so far we have not seen these negative impacts in the broader economy have a material effect on companies' earnings. Palantir especially is a company that has seen their business increase in a massive way over the last year and a half. Midway through 2023, they were increasing their top line by only 12.5%. However, today they are increasing their top line revenue numbers by 36% year over year. However, despite this tremendous top line growth, Palantir is still a speculative company because they have only been profitable for the last year and a half. And more recently, we actually saw their trailing 12-month EPS drop by 1 cent. That drop in EPS is a little bit misleading because they did have a one-time SAR related expense, which SAR stands for stock appreciation rights. It's basically payments made out to employees based off stock performance. And that resulted in their GAAP net income dropping to $79 million from $164.7 million. They would have had an EPS closer to 7 cents had it not been for this expense. And this drop in EPS is even more misleading when you look at their margin, because quarter over quarter from Q3 of 2024 to Q4 of 2024, their margin expanded by 7% to 45%. This should ultimately have a big impact on their profitability in the long term. Those are all great things to look at for Palantir moving forward. They are seeing revenue increase massively. They are seeing their profitability and margins increase. Those are all going to be huge moving into the future. However, how much you pay for a stock is very important, and that's where valuation comes in. We have the forward P ratio. This is the price versus the forward earnings for this company. And right now, Palantir's forward PE is sitting at 147. To put this in perspective, the market right now, or the S&P 500, is trading at a forward P ratio of 21.15. However, Palantir is a fast-growing company. It fits a lot closer with the NASDAQ 100, which currently has a forward P ratio of 25.17. That means Palantir, with a P ratio of 147, is trading at almost 6 times that of the NASDAQ. And this is the problem with Palantir's stock. There's already so much growth being priced into the company. If we look at 2025 EPS estimates, the average estimate is sitting at 56 cents. That is up from 41 cents in 2024. If we look at 2026 numbers, they are sitting at 70 cents of EPS. That is a forward P ratio of around 120. Ultimately, if Palantir were able to double their earnings in 2027, that would result in $1.40 of EPS, which would be a forward P ratio for 2027 of around a 60. And the general rule of thumb for companies is that they cannot keep up growth rates to maintain valuations over a 60 PE ratio. What that means is I personally believe that Palantir should be trading somewhere between a 40 and a 60 forward PE. If we look at 2025 numbers, the average EPS estimate again is 56 cents. That means for the company to trade between a 40 and 60, that would result in a stock price between $22 and $33 per share. In 2026, if Palantir comes through with 70 cents of EPS, that results in a forward P ratio of 121.3. Again, in my opinion, Palantir should be trading between a 40 and a 60 PE ratio, which would result in a price anywhere from $28 per share to $42 per share. And if in 2027, we assume there is massive growth for this company on their bottom line, they achieve an EPS of $1.40, double what they put up in 2026, that would result in a forward P ratio of around a 60.65. However, if we still assume that Palantir should be trading in the range of 40 to 60, that still means that the stock should drop to around $56 per share to $84 per share. My opinion around Palantir is that their current stock price should be closer to $35 to $45 per share. This would be a forward P ratio between 50 and 65, which in my opinion is a lot more reasonable for the company. However, keep in mind that is just my opinion. Don't buy a stock or even sell a stock just because some random guy on YouTube talked about it. Make make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all that said, I hope you enjoyed the video. If you did, drop a like down below. Thank you guys so much again for the continued support on the channel. If you want to support the channel for the long term, subscribe down below and have a wonderful rest of your day. And for the joke of the day, what do you call a fly with a sore throat? Check the comments down below for the answer. Thanks for watching.